and welcome back to another episode of the Recession Resistant Real Estate Radio. I'm your host, Brandon Cobb, co-founder of HBG Capital. And today I've got a fun, knowledgeable guest, one of my friends, Stephen Pesavento. I've known him for, 5 or 6 years now, and watching his journey and success has just been absolutely incredible. He's an active investor. He helps clients build wealth and cash flow through commercial real estate at Von Finch Capital. Von Finch Capital is his investment management and sponsor specializing in value-add multifamily. He's the host of the Investor Mindset Show and a certified high-performance coach. He's raised tens of millions of dollars and is an active partner in several $100 million of real estate deals. We'll get into that. Stephen, welcome to the show.
Brandon, super great to be on here, man. It's crazy to think back how long ago we met. Probably 2016, 2017, somewhere back then.
I think it was 2017 when we both joined a mastermind. We were both wholesaling and flipping, though you were doing some things at a much bigger scale than I was. And I'm excited to get into your background a little bit more here and some of your deals, because I have some of my personal funds in some of your deals. So I love what you're doing. Maybe we can talk about that a little bit. But for those who don't know you, tell the audience, what are you up to these days? And then maybe tell us a little bit about your origin story, reverse engineer how you got here.
Yeah, so I run Von Finch Capital, and we're an investment manager and sponsor of commercial real estate and other types of investments. And so our real focus is helping people who have money turn that money into both income and growth by investing in, fully managed commercial real estate. So we really go out, we buy, operate, and manage, and then we pool together our investors' capital to go and partner and actually operate and execute on those projects. So a lot of multifamily, a lot of 200 to 300 unit buildings, some heavy redevelopment on smaller assets. But one of the things I really love doing is being able to help share that vision and story of what's really possible for people, because when I was growing up, oldest of 4 kids, single mom, worked as a waitress, never made more than $20,000, grew up without a lot. And one of the things that I remember most growing up was my parents, who divorced when I was young, but they were always fighting about money. And so I grew up without a lot of it, obviously some great loving parents, but really this belief that there's a lack of money. It's not available. It doesn't grow on trees. Don't ask for it. Don't believe you can do it. And fortunately for me, I was able to get introduced to some different topics, some different mentors who really showed me that was all wrong. And over the last few decades, I've been able to really reshape my mindset. And that's really what we talk about on the Investor Mindset Show, right? My top rated podcast. We really dive into understanding how successful people think, what successful people do, and what they invest in, and what you can do in order to apply those same thoughts and beliefs to your own life. Because at the end of the day, mindset is simply your thoughts and beliefs that directly lead to the actions you take and therefore the outcomes you experience. And what's so great about that is as you learn more, as you grow, as you change those thoughts and beliefs, you actually change who you are and how you're showing up in the world. So that's a little bit about what we're focused on. And what I'm really excited about is kind of what's coming next. We're in a crazy time in the economy, but that actually leads to some great opportunity.
It does. It does. I know everyone's focused on the market conditions and what's happening. It seems like everything's turned with interest rates that have gone up so high this year. What are you seeing right now? Because I know that 2020 to 2022 just saw this unprecedented growth in the value-add multifamily. I mean, there was so much money that was going into this asset class. It was getting really hard to find deals. It kind of felt like the 2018 and 19 house flipping days when things just got squeezed and prices went up. It was hard already to find deals, and with interest rates going up, it's getting more difficult to make deals pencil out. What are some of the things that you're seeing right now in the market, and what is Von Finch Capital doing to help mitigate some of the risks with these rising rates?
Well, last year we bought 8 properties in 2021. And in 2022, we've bought 2 properties. So it's not because we have a lack of capital. It's not because we have a lack of investors. Our investors continue to invest over and over again. We have a 75 to 80% reinvestment rate, and we're growing. So, I mean, that's huge. That means a lot of folks are continuing to put money in. But what happened is the market completely changed. So 2 things really popped up. First, interest rates went up. When interest rates went up, the cost of capital goes up. And really, when you look at buying commercial real estate, the bank is your biggest partner. It's your biggest money partner, and it happens to be the lowest cost of the project. So typically, you're also seeing a 65, 75% loan to value on these types of commercial multifamily that we're buying. And what we've seen is a huge change. So interest rates went up. That means the cost of every one of those dollars went up. And then second, we're seeing loan to values go down. So instead of seeing 75% loan to value, we're seeing 60. So what does that really mean in real terms? What it means is that it's requiring for us to buy a deal twice as much equity as it did a year ago or 24 months ago. And the cost of that debt, that 50 or 60% that we are getting, is twice as expensive. So what that means is we have to create at least double the return, because those returns are being divided out by a much smaller pool or a much larger pool of equity. So what that's done is it's essentially made deals not pencil. If you're seeing deals get done in the last 6 to 8 months, 6 to 10 months of the year, what that's really come down to is finding a really great opportunity, finding real distress, and the access and availability of capital and debt. And so what we've noticed is that for many months, deals have not penciled. We've looked at a number of different strategies. We put together, as we had talked about, we put together a preferred equity fund. Preferred equity is a more secure style of investing. And it really makes a lot of sense when loan to values go down. Preferred equity is an option that sponsors start using, and investors can invest in it and take, about a quarter of the risk, but make essentially very similar to the same type of return. So we've looked at those kind of strategies, and what it's really come down to is just being patient. Being patient, looking, talking to brokers, talking to sellers, and finally, we're in the beginning of November of 2022 right now. And over the last 6 to 8 weeks, we've finally started to see prices start to actually match where the market's at. What that means is that sellers who really do need to sell or have a real personal need are finally starting to adjust their prices to make sure that they can exit. And really, it comes down to this. Do they have debt that's going to turn over in the short run? Meaning they have to sell or they'd have to refinance. Or 2, maybe they're going through something from a personal life standpoint. Maybe they're at the end of their career, they're retiring, maybe they need this money to live off of, and they see this as a last-ditch effort to be able to sell in case things were to get worse. Or 3, they have been operating the property poorly. So this is what we've really been waiting for, and we're finally starting to see those opportunities start to come back to the market where we're seeing true value, because at the core, Von Finch is a value investor, the same as Warren Buffett. We're looking for opportunities where we can buy below market, we can improve the property, and we can end up selling for, a great return while creating some good cash flow along the way.
Yeah, it's really interesting. Right now, there's a transitional period. Interest rates have shot up so fast. There's been buyer sticker shock across pretty much all real estate assets right now. And what's been really interesting is I think a lot of people were predicting this great crash and the demand's going through the floor. But what you also saw supply go down because all the people who had locked in these lower interest rates weren't selling. And they wanted to, wait and see what happens here. Who wants to put their home on the market or put their commercial asset on the market when they've got a much lower interest rate, when they're having to sell it to someone who's getting a much higher interest rates? It's causing issues with people who would normally buy or would normally sell. And so it sounds like you're seeing some of those sellers who now really do need to sell and not just put it on the market for some crazy amount of money and get over asking price for it. Like those deals have started to disappear. Things have started to normalize a little bit.
Yeah, that's exactly it, is that there's still those people who are floating out a property. They don't really need to sell. They would consider selling, but they don't really have a motivation to sell at a market price or below market price. And so, those kind of people always exist. But one thing that's important to understand for you as a listener is, if you're listening to this and you're thinking, hey, well, as interest rates are going up, the housing market's going to crash and this is going to end up putting us in, a bad position. Maybe I shouldn't buy. The truth is that the housing market is very different from the commercial multifamily market. Two very different things. First off, I personally don't think the single family housing market's going to crash. I think if anything, it's a flat line. Things will stay stagnant. Properties will not trade unless they have to, and they'll trade at a little bit of a reduced price. But overall in the housing market, there's a ton of equity that people have. People have been required to keep the loans and financing under very, very tight scrutiny, meaning we're not in the same position that we were in 2008. However, that same problem of a house that once, you were going to buy for $500,000, that maybe you were going to pay $2,000 a month for your mortgage, and now you're going to pay $3,500 for that same house. Mm-hmm. What that's doing is it's actually pricing people out of the ability to buy. And so that is actually driving up rental rates in these multifamily properties. Mm-hmm. Now, how long is that going to last? We can't predict. We do believe there's going to be continuous growth year after year. We're not going to see the same 10, 15, 20% growth that we saw last year, because that was absolutely outrageous. But there is some phenomenal opportunities, and there might be some even better opportunities in the future. But right now, we're seeing great deals that really make sense for people to be investing in.
Yeah, it blew my mind when I remember the moment that I was able to figure out how the value of these commercial multifamily assets are valued based on the net operating income and the cap rates. And I remember when I was first kind of getting into it and learning, I couldn't figure out why people were making such a big deal about an apartment complex that had 100 units, and they were able to find one little storage area that they could make like 3 units out of and rent out. And I was like, that's only like $30,000 a year. It's really not that much money, but the NOI and the cap rates are a function of the sales price. And when you increase rents by, 6, 7, 8%, that's not a 6, 7, 8% the value of the property. It's actually much higher than that. So I think the build to rent portfolios and the value add, especially rental portfolios, are just poised to have some phenomenal growth. Now, what are some of the demographics that you're seeing that are driving these increases in rent rates? I know that the lack of affordable housing is definitely one of them. Are there any other factors that you're looking at, that you're tracking, that's causing you to get excited about this asset class?
Yeah. Well, one thing just to point out, you just mentioned, adding $30,000 a year to the bottom line, the net operating income of a property. What does that do? Well, what's wild about it is that at a 5% cap rate, 5% cap rate is simply a term that really is used to be able to compare one property to another as far as how it's valued. So it's a valuation metric. At $30,000 a year in additional income, net operating income, that adds $600,000 of value. Right. And so we were in a market where it was extremely competitive, and we were actually seeing cap rates in the 3s or the 4s. And at a 4% cap rate, that's $750,000 of value that's added. So this is why commercial real estate is such a powerful tool, is because it's valued like a business, and it's valued based on income, right? It's valued based on how that property is generating income for the owner. And what's so great about commercial real estate, better than most other asset classes, both in real estate and outside of real estate, is that you can use debt, very cheap debt at that, in order to finance the purchase of this quote business, right? When you
Mhm.
buy a 200 or 300 unit apartment building, you're essentially buying a business, but there's very few businesses that you can buy, say a $50 million business that you can buy, and the bank will lend you money at 2 or 3 or 4 or 5% for 30 years, right? Or for 10 years or for 5 years. There's very few of those options. And that's one of the reasons that real estate is so powerful, is that it's a hard asset that is valuable in itself, but it's based on that income that ends up really being the driver of value.
Yeah, I think it's a perfect recession resistant model just because people are always going to need a place to live, right? My thinking when it comes to these economic contractions is, does money continue to flow into the asset classes that you're currently invested in, or does it flow away from it? Right. COVID had this big boom, RV parks, RV storage, Airbnbs just went through the roof because everybody wanted to get out and do something fun, but they didn't want to be around people. And certain types of discretionary income will dwindle to almost nothing when you get these economic contractions, but housing never will. People are always going to need a place to live. And if you can find those areas that are, not necessarily war zones, but your, classic value add, blue collar working class facilities that you can buy for under replacement costs to limit competition, I think those are phenomenal investments. I want to switch gears because I know you talk to a ton of entrepreneurs and a ton of great leaders in this space. Over here, you've been able to interview, gosh, I've watched a ton of your episodes. Chris Voss from he's the negotiation guy. I forget his book.
Never Split the Difference.
Never Split the Difference. Thank you. And a ton of other guys. What have been some of your biggest lessons learned studying all these entrepreneurs that you've had on your show that you've got to have these conversations to? And I'm sure you could talk for 5 hours on this, but what would you say stands out the most?
Well, I would say that there's really like 5 key success principles that I've learned studying and interviewing, hundreds of extremely successful investors and entrepreneurs. And so these 5 investor mindset success principles, it really comes down to, first and foremost, that the individual really, they view challenges as opportunities, meaning they look at that challenge, they look at that problem as a profit opportunity, because problems equal profit. Mm-hmm. So they don't necessarily look at a building that is not operating very well, or, an ugly house in the house flipping space, or, a problem that, some business owner is dealing with. They don't look at that as like, oh my gosh, I need to stay away from that. They're drawn to it. They actually look at it as, 1, an opportunity to learn and grow, and 2, an opportunity to create massive profits for them and for their investors. And so when it comes down to this is one of the biggest things that separates those who are extremely successful from those who continue to fail as they're moving forward, is that mindset, that way that you're thinking about it is extremely different. They look to cap that downside in order to be able to truly deliver, a great experience for themselves, but also to create a great return for those people who are investing with them.
Mm-hmm. Big one on that. What was interesting, something that we were doing here that was a huge problem, like you said, that turned into an unexpected opportunity, was just the crazy volatility in construction costs. We started going to Mexico, to Turkey. We've got these shipping containers and trucks that have been arriving, and my partner brought it up, hit me. He's like, wait a minute, if we're trying to reduce our costs, why can't we just sell this to other people? And the light bulb went off. I was like, holy crap, I can't think of a bigger need right now if you're in the construction space than to get your costs down, because they've gone up 30% year over year. So it was really interesting to take that concept and see it being applied. So that was number 1 of 5. What's the second, third, fourth, and fifth?
Well, the second is that they're ultra focused. They're doing one thing and they're doing that thing extremely well. one of the biggest mistakes that I see people make when they're getting into the real estate space as an active operator or even potentially as an investor is that they're focused on doing too many different businesses that are not related to one another and do not help support the growth of one another. A really good example of this is, in the real estate space, I'll go to a real estate meetup and I'll meet somebody and I'm talking to them and I can instantly tell if they're going to experience a really tough time, if they're going to fail quite a bit, or I can tell those people who are going to really be able to find their path, because when I hear from people saying things like, hey, I'm going to operate single family and I'm going to start building and I'm going to do storage and I'm going to do this and I'm going to do that, and they continue to be focused in too many directions, what that ends up leading to is a situation where you don't truly have that ability to really become an expert in one or two things, right? So the most successful business owners, they focus on doing one thing. They do it really well. They hire and leverage great experts that can help them succeed in those areas that they don't want to do. So, a perfect example of this is Richard Branson when he was starting Virgin Records back in the day. Now, you might say, Steven, Richard Branson owns like 100 different companies and he's doing everything from going to space to, previously running an airline and, running cruises and doing all of these different strategies. And he's absolutely, yes. At this point in time, he is in a different place than when he started. But when he started, he focused on doing one thing continuously over and over again until he had success, and he sold that business. And he sold that business for a ton of money, which allowed him to then go focus on a new business to put his focus and effort and energy into that, while he invested money into hiring great people who would actually be able to help him succeed. And so this is one of the biggest things. And it really goes back to that same with the problem is in the profit, or profit is in the problems, is if you're focused on one thing, you're able to look at that problem and know, because you've done it multiple times or you have that insider knowledge to be able to know, hey, this is a problem. This is how I can create a profit from it. This is how we solve it. And this is how we go forward. So I think that is one of the biggest things. I'd love to talk about all of these, but I think we should continue moving forward where folks can go and they can get access to all 5 of these success principles. They can print off a deep dive, 40-page document that kind of dives in to the details of these. They can head over to investormindset.com/success. You can just register right there and you can download it instantly. You can dive into these and some other strategies that can help you both from an investing standpoint and also in your business.
Yeah. Now, I know we could talk for hours on this subject. And I think the biggest mistake people make is they see these different business models, whether it's single family rentals or commercial or whatever have you, as these buckets to catch money. And the reality is the bucket's going to have a lot of holes in it when you start it out. And you can spend time and effort trying to plug up the holes of one bucket and get it to actually catch some water and then really turn the spigot on and actually fill it up. Or you can continue trying to go from bucket to bucket to bucket, trying to patch the holes. And the more you neglect one bucket, the bigger the holes get. You get more holes in it and you end up just completely losing all the water and you don't catch any, which is not the goal.
Yeah. And this is where it really comes down to, what I recommend for most people is they need to sit down and get really clear on what they want and why they want it. What are you really looking for? What's the purpose behind that? Why is it important? What does that life look like? And then really set that objective so that you can actually move forward in that direction. Because a lot of people, what they'll do is they'll be in their career and they'll think to themselves, hey, I need to create a side hustle, or maybe I need to get into real estate. Maybe I need to buy a rental property. And what they're thinking is tactically instead of thinking strategically. What's the strategy? What's the outcome that you're looking for? And how can you be sure that you're actually going to get there? And one of the best ways to do that, this is the way billionaires think about solving problems, is they ask themselves, what do I want? And then most importantly, who can help get me there? Who's that expert who knows the inside track to be able to succeed at doing this one thing? That's where hedge funds exist. That's why these billionaires invest money into hedge funds, because that expert, they believe they have a strategy that can beat the market. The same goes true for people who work with you and are investing in the types of assets and projects that you're building. And for people who work with people like me who are looking to add multifamily or other income producing real estate to their portfolio, it's the best path to success is finding experts who are great at what they do. And then you, as that individual, as that person, can focus on whatever your expertise is. So if you're a doctor, you're going to focus, hey, how can I build my practice out? How can I make more money? How can I make that more profitable so that I can generate income in my business? And then I can take that money and I can actually apply it directly into investments that are going to actually drive me and my family towards what I really want. And what I've found is most people are really looking for more freedom. They're looking for flexibility, and they're looking to have more fun. And you can do all of that more effectively when you are focused on letting other people do their job, and you find the right people to do that.
Yeah, you're leveraging other people's time and expertise in order to produce additional income streams for you, right? It's the who, not the how. Who's already figured it out, not how do I spend years trying to figure this whole thing out. The focus thing is perfect. That was one thing that was lacking. I know for me in the beginning stages when I was getting started, I was trying to be the next Tony Robbins coaching course. And I had like a medical device sales rep course. I was doing real estate. And it was when I cut all those other things out and just focused on the real estate thing that things really started to turn on for me. So focus is key. Speaking of focus, I do want to jump into how people can get a hold of you and learn more about your investment types. I know that you had a big focus for the big elephant that's been in the room this year, inflation. You've got an inflation fund. Can you tell us a little bit about that? I think it's currently closed, but you might be reopening next year.
Yeah, exactly. So, when we're talking about strategies of what's happening in the market, what we realize is we need to focus on two things. We need to focus on finding value in current properties, being able to go out and do exactly what I described earlier, finding properties below market that need what we're the best at executing, adding value and construction. And then second, we saw this huge opportunity in the market where interest rates have gone up. Banks are unsure about how much leverage they should be lending. And so they're being extremely conservative. They're listening to the Fed and they're lending at 50 or 60% loan to value. And so what that's created is it created this huge opportunity for another type of investment strategy called preferred equity. And at the end of the day, we're seeing inflation run rampant. CPI was at 8.5% during the last read, and real inflation is likely significantly higher than that. So it's even more important to be able to find opportunities where you can continuously grow your money in a very secure type of investment that at least hedges you, matches inflation, if not beats it. Right. And so that's why we launched the anti-inflation fund. And the reason why preferred equity makes so much sense is because when you think about buying a piece of real estate, if you think about a bar graph in your mind, typically the first 60% of these investments are going to be debt. That's going to be from the bank, Freddie, Fannie. The bank is going to end up loaning 60% of that loan. Then the next 20% is what's called preferred equity. And what's beneficial about that is it gets paid out a consistent return like debt. But because there's 20% of common equity sitting above it, it's much more secure. So you could really think of this like a second mortgage in the commercial real estate sector, but as equity, and that pays out a strong return, somewhere in the 10 to 15% return type of a range. But you've got that 20% buffer. So what that means is the value of a property would have to go down by 20% in order for you as that preferred equity investor to lose your investment. The likelihood of that happening is extremely low. And you're actually put in an even stronger position because you're paid back 100% of your investment plus 100% of your preferred return before that common equity is paid. So we saw this big opportunity in the market that there's thousands of operators and sponsors who previously were going to banks to get that 60 to 80% filled. And now there's a need for investors like you and me to be able to come together and be able to fill that gap. And so it's wild because we've been able to essentially create, nearly the same return, about, 70 to 80% of the same return, while only taking about a quarter or less of the risk. And that's what we've launched. So if you're interested in checking out more about that, you can go to Von Finch, VONFINCH, vonfinch.com/pref, PREF. And you can check out a little bit more information. When we reopen that fund, you'll be able to participate and get early access. And that's a little bit about what we're working on right now.
So vonfinch.com/pref to learn more about the inflation fund. And for those that want to connect with you, maybe book a call, get to know you, or learn more about upcoming opportunities, where can they find you?
Yeah, best place to stay in touch. Follow me on Instagram or LinkedIn at Steven.Pesavento. If you're interested in getting involved, head over to vonfinch.com. You can register and you can schedule a call right there with me or another member of our team. And, however you connect with us, I really encourage you to just let me know that you listen to me here with Brandon, and we're here to help. We're here to help support. We have, hundreds of clients who love working with us, and we'd love to be able to support you in whatever your dreams and visions and goals are.
All right, guys, head on over to Steven's website, check his stuff out. Steven, this has been fun. I'm going to have you on later on. I want to do a follow-up maybe when this fund launches, to get an idea of what's going to be in it and what you're looking for. Till next time, my friend.
Absolutely. Thanks, you guys. We'll see you.